Hi, I'm Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about the fund flows activity for the week ended Wednesday, February 2nd. Well, it was a tough week for the markets last week. A stronger than anticipated jobs report sent the market into a tailspin. The jobs report showed that the economy added 200,000 jobs in January, but more importantly, it showed that wage growth was finally heating up. Wages rose about 0.3% for January, making the year-to-year growth 2.9%, a level that we had not reached in over 8 years. This caused concern in the market because it raised inflation fears, which then led to fears that the Fed would overcorrect, or not overcorrect, but more aggressively raise interest rates than they had planned to. This made for a very volatile week of trading on the market. The Dow suffered its largest one-day loss in history on Monday, February 5th, as it closed down almost 1,200 points. This was followed up by another 1,000-point drop just a few days later on Thursday, February 8th, which puts the Dow in correction territory, down 10.4% since its high of over 26,600 just a couple weeks ago. Well, on that good news, let's turn our attention back now to the fund flows activity. We'll start by taking a look at our fund macro groups. Equity mutual funds, as would be expected, had outflows last week. They saw $3.1 billion leave. Taxable bond funds took in $4 billion of net new money. Muni bond funds had net inflows of $621 million. And in what appears to be a flight to safety, money market funds took in over $30 billion in net new money last week. Let's take a closer look at each of our fund macro groups now. We'll start by taking a look at our equity fund groups. Starting with the mutual fund group, as we said, they had net outflows last week of $3.1 billion. Continuing the long-term trend that we've seen, domestic equity funds had accounted for all these outflows, as they had $5.7 billion leave their coffers. This marks 57 weeks out of 58 that they've suffered net outflows, which has resulted in net outflows for 2017 of just over $180 billion and just over $15 billion so far this year. On the other side, non-domestic equity funds have been experiencing net inflows for just about the same amount of time, the same trend that we've seen for domestic. They took in $2.6 billion this week after $48.5 billion in net inflows last year, and this week's results push the year-to-date net inflow for the group to $21.8 billion. Let's move on to our equity ETF group now. Large net outflows from them last week, $20.8 billion. It was their second largest weekly net outflow ever. The lion's share of this is attributed to one ETF, the SPDR S&P 500, saw $17.2 billion leave, although there was a couple other large net outflows, as we see the iShares MSCI EFA ETF had about $3.4 billion leave. On the other side of the ledger, we see the iShares Core MSCI EFA product with net inflows just shy of $5 billion. Let's move on to our taxable bond fund groups now. The mutual funds took in $4 billion in net new money last week. The major players, core bond funds and core plus bond funds, had $2.2 billion and $1.5 billion respectively in net inflows. They've had a good run here. We've been seeing a lot of net inflows in the recent past. On the net outflow side, high yield funds have been hit hard lately, especially last week. They saw about $1.4 billion leave. Let's move on to our taxable bond ETF group now. This group suffered net outflows last week, just shy of $900 million. The major net outflows belong to the SPDR Bloomberg Barclays high yield product, as well as the iShares JP Morgan US dollar emerging market bond product, had net outflows of $1.2 billion and just shy of $1 billion respectively, while the iShares TIPS product had net inflows just shy of $500 million. Makes sense as the market starts to worry about possible inflation. Moving on now, we'll take a look at our muni bond fund group. Net inflows here again last week, $621 million in net new money was taken in. This is their fifth straight week of net inflows. And the usual suspects were responsible for net inflows. General munis took in $631 million, and intermediate muni debt took in $338 million. Similar to the taxable bond group, we see that the high yield munis were also subject to net outflows. They had about $550 million leave their coffers. The last group to take a look at is money market funds. Big week for them last week as a possible flight to safety. Investors looking to sit this one out. The fund macro group took in $30.8 billion in net new money. And the two main groups responsible for this were the institutional U.S. government and the U.S. government money market fund peer groups had $18.8 billion and $7.3 billion in net inflows respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please join us at our website. It's www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.